recorded, and I'll post this one up on Canvas as well. Okay. All right. So just a couple of things. One slide here from chapter 1. Managerial accounting information helps us. And remember, we talked about planning, control, and making decisions. Okay. Were sort of the key things that we try to cover with managerial accounting. Remember, we're looking more for internal reporting purposes than we are external reporting purposes. However, that will be more our focus after chapter 4. Right now, for chapters 2, 3, and 4, where most of our questions will come from the first midterm, we are still dealing with the gathering of costs that will be used to generate our external financial reports. Okay, what's happening? In intermediates, whatever, in the introduction, Business 20, we were all about a retail entity. Retail entity buys their inventory from a manufacturer, whatever, and then puts that on their storeroom floor so you can come around and buy it. For example, Nordstrom is the classic retail entity. Well, Nordstrom doesn't make those pants. There's not people back there, elves back there sewing up the pants that you buy. They buy that from a manufacturer, right? Okay, so what we're going to do now is step into the position of the manufacturer who is developing the inventory that they will then turn around and sell. Okay, and so we're going to have to understand how we'll gather the cost for the inventory that will ultimately become our cost of goods sold. So we're still in the external financial reporting aspects that we're looking at here as we go through this material. Okay, so we have different how come everyone gets clapped for but me? You clap for that guy? This guy next door is always getting a hand? Okay. So you come over, and maybe it's because I can't get my clicker to click over for some reason. It's working. I got my laser, so the battery is on. He's not supposed to be clapping this early in the term. No, don't, please. I'm one of those people that prefers to be booed. Okay, let's see. Damn. Okay. I don't know why it's doing this. This is the second time it's done this to me. It won't click over for some reason. Even though it's looking like everything's working. So I'm going to pause. Okay, good. Now we come over and we take a look at this next one, the model whose goal is to eliminate waste, satisfying the customer, and producing a positive return to the company. The lean business model, we said that more companies are going to that, and that what, rather than produce the goods and sit there and wait for a customer, we wait for the order from the customer, and then once we get that order, we go ahead and produce the goods. So we're not sitting there with a lot of standing inventory, etc., right? And then we also mentioned, not the subject of this question, these days we're seeing a prescription approach where you go ahead and you prescribe for razors to shave with, or socks. I mean, all kinds of things that you think you just wouldn't go to the store and get until you needed some more socks. Now you can have a subscription where they'll send you 12 pairs of socks every other day, I guess, or whatever. And I guess you go about it that way. Okay, I don't know why anybody would do that, but if you got a certain kind of sock you like, that's fine. I don't care for most socks that they sell because they put them too high up on your leg these days. All the socks are too long. They squeeze your calf. I need socks below the calf. So I have to go to the Mission District in San Francisco to buy my socks. But other than that, I guess you can get them at the regular store. Okay? Okay, now you come over, and we're going to be gathering costs now in our system as we manufacture our goods. Okay, and we start in chapter 2, understanding the nature of these various costs, okay? Now, we put costs into two broad categories. We put them into either direct or indirect. A cost is considered direct if we can easily trace it to the product. If we can easily trace the cost to the product, we consider it direct. We consider it indirect if we consider it too difficult to trace the cost to the product. Okay, so it's really a question what's direct and indirect is the ability for us to trace that cost to the product. Okay, so it's not like it's a scientific definition, it's a matter of what? Of the ease of tracing it to the product. Okay, so it's not like, all companies will have the same set of direct or indirect costs because it translates into the company's ability to what? Being able to track it to the product. So there's a little bit of art involved in here, maybe more than accounting, more than science, okay? So with that being the case, let's just go ahead and play around with an example, see if we can figure out which cost would be direct, which cost would be indirect. So let's say we're talking about a sandwich company, okay? A restaurant that's going to be making sandwiches. Did you all have lunch? Okay, good. So this example hopefully won't make you too hungry, right? Okay, so we're going to go ahead and do example of sandwiches. And let's see if I can. You probably shouldn't mess with it while it's working, huh? See, I shouldn't have messed with it. Oh, wrong one. Hello. Okay, good. Let me get this out of your way. You're probably thinking, when's he going to move this stuff? I'm like a walking office supply store. Need anything? Pens? Anything like that? Okay, so let me get this all out of the way. Okay. And let's see if I can get this thing to do what I wanted it to, which is sort of black out. Yeah, okay, good. Okay, and I can put this back up. We don't need the projector for this example. Okay, all right, so we're going to be making sandwiches, right? Okay, and what's a common thing that you see in most sandwiches? Bread. Okay, good. So let's talk about bread. Is bread for a sandwich going to be a direct cost or an indirect cost, do you think? Direct. Good. It is easy to trace I guess we usually put 2 pieces of bread in a sandwich. Okay. Sometimes they have this open face sandwich where it's just 1 piece of bread and then all the stuff sits on top of the bread, but I'm not sure I understand how you eat that. Okay, so I like to put another piece of bread to close all the stuff off, right? Okay, no open face sandwiches here. Okay, now maybe I don't like open face sandwiches because I used to be a bureaucrat. Okay, so what do you have? You have an open face sandwich with a faceless bureaucrat. Everything just slides down. Okay, anyway. All right, so you can work on visualizing that one on your own. Okay, so what happens? So we have what? We have bread as direct. Okay, any other directs you think might go into meat? Okay, if you're not a vegetarian, I guess we'll go ahead and we'll do turkey. Okay, I had some turkeys in my backyard. I don't mean my buddies over watching the football game the other day. These wild turkeys just start walking through my backyard. They're pretty big too. It's like, where all these turkeys come from? Okay, all right. So turkey would be direct because you put 1 piece of meat on there, 2 pieces of meat, or you weigh it or something. Pretty easy to trace it, right? Okay, good. Anything else that might be direct? Tomatoes? Cheese? I think cheese you might be able to put over here in the direct because what? 1 piece of cheese per sandwich, right? And you wanted to say tomatoes, right? So what happens? You go to the store and you pay what? How much you pay for a tomato? 69 cents or something? I don't know. I have no idea. Okay, so I'm a bad shopper. I'm one of these people that I just throw, I like this. I just throw it in the basket, and while they're checking me out, I'm going, doo-doo-doo. Okay, is it done? Okay, good. How much? Okay, so anyway, you do know I'm an accountant, right? All right, so what happens? I don't know how much the tomato costs, but we get the tomato, we pay 69 cents for it, right? Okay, and then we do what? Then we slice the tomato, don't we? Now, how hard would it be to sit there and count the slices on the tomato? Say it's 10 slices of a tomato just to make the math easy, 69 cents. So that's what, about 7 cents per starting to sound per sandwich. It's starting to sound too hard to me. Okay, so I'm going to go ahead, and again, it depends on the sophistication of the entity's cost accounting system, but I'm going to say for our company, that's too much trouble. So we're going to put tomatoes in indirect because what? Because we can't really trace it easily to the product. Now you're saying, well, okay, well, what are you going to do with that cost? That's 69 cents. We'll get it into the product somehow, but for right now, we're going to call it indirect. Okay? Okay, anything else you like on your sandwich? Go ahead, guys. Speak from your stomach. Huh? Mayo? Mayo, lettuce. Okay, so let's do the mayo first. Mayo. Oops. God, I took all the fun out of it. I just wrote it under indirect, okay? Mayo's going to be indirect because what happens? You got a jar of mayonnaise. You're not going to sit there and say, let's see, I paid $4.88 for this jar of mayo, and I think I'm putting about a tablespoon per, and there's about 82 tablespoons in there divided by 6, carry the 3. Too much trouble, right? Okay, so we're going to treat the mayo as indirect. What'd you say? Lettuce? Where do you want to put the lettuce? Indirect again, right? What happens with the lettuce? Well, lettuce, you sit there and you have this head of lettuce and you peel off, but you know how lettuce acts. You pick them, some leaves that fall off, some won't tear off. Going to be too difficult, right, to figure out. So we're going to go ahead and allocate it, right? You guys like knock-knock jokes? You know, knock-knock, who's there? Knock-knock. Lettuce. Let us in, and you'll find you're supposed to say, let us who? The way those jokes go, let us who? Let us in, and you'll find out. Okay. All right. Ha ha. Now you know why I became an accountant. Okay. All right. Anything else? Huh? Onions on a sandwich? That's fine. Okay. Huh? Avocados. Hmm. Okay. I'm just thinking maybe you put a whole avocado on each sandwich. No? Okay. Well, I like avocados, and you can see I don't hold back on anything I like to eat. Anyway, okay. Salami, okay, we'll put the salami with the turkey. Salami, you can probably figure it out, right? All right, huh? Oh, that's right. We have to make the sandwich, don't we? Okay, so let's say we sit there and we're able to time that it takes each sandwich maker 10 minutes to make a sandwich. Pretty easy to trace then, right? That person works for what? Well, let's say it takes them 6 minutes to make the sandwich to make the math easy. In an hour, they should be making what? 10 sandwiches, right? And we know we pay them an hour. Okay, so we should be able to do that. So, yeah, labor is probably what? Going to be direct? Is all labor direct? The sandwich makers is. But maybe we have what? A supervisor? And the supervisor does what? We can't track the amount of time that they spend on one sandwich because the supervisor's going over to one sandwich maker and saying, hey, don't put as much mayonnaise on those. Did you make sure and get the extra cheese that the customer asked for? You know, next time don't toast the bread quite like that. I said don't put that much lettuce on them tomatoes. Whatever, right? And so the supervisor is kind of jumping around so much that we're going to treat their labor as what? Indirect. Okay, and we're going to see that we're going to have to allocate it. Good. Any other, apply it really, any other things you want to consider here? Good. We can't make the sandwiches in the dark, can we? I mean, we could, but that's probably going to get messy pretty quickly, right? And so we need some electricity, or maybe we're going to toast some of the sandwiches, so we need utilities, don't we? Good. Now, rent. We're not making these sandwiches in a field somewhere, right? So we got rent, if we are renting the building. What if we own it, huh? Utensils. Utensils, okay. I guess so. I'm not sure what would we do with the utensils. I'm thinking utensils because of just the difficulty. We'd probably just expense those in the period that we buy them. We'll probably treat it as a period cost. Okay, so, but napkins, okay, we probably treat that as a period cost. Okay, I guess we could put napkins over here if you want. Oh, when you say utensils, you mean like plastic ones? Oh, okay. Plastic utensils. I thought you were talking about like steel utensils. It's kind of hard to, what are we going to depreciate them? So we'd probably end up expensing them. But I did say an important word there, depreciation. We own the building. Is depreciation direct or indirect? Good. Depreciation is going to be indirect. If we own the building, right? Okay, so you probably would either have depreciation or rent. You're probably not going to have both, although you could have one building that you're renting, another one that you own, and you depreciate. How about, do we have to pay property taxes if you own something? Okay, so we probably should put property taxes over here. As indirect. Okay? Okay, good. So we've got these direct, we've got the indirect, right? Now what's going to happen? The direct are easy to trace to the product, so every time we put a piece of meat on the sandwich, we'll go ahead and we'll charge $1 because we know how much each piece of meat costs. Okay, for the bread, for the 2 pieces of bread, 50 cents. For the cheese, I don't know, 25 cents, I don't know. Okay, let's say we're paying the person, $10 an hour? Just to make the numbers a little bit easy. And we say, let's say it takes them a half hour to make a sandwich. That'd be a pretty slow sandwich maker, but we're sort of, pretty sophisticated here the way we do this. So that person can make, what, 2 sandwiches in an hour? And so we're going to have labor of what, $5 per sandwich? It's probably a little high, but whatever. Okay, $5 per hour for the sandwich. Okay, all right, good. Then what? Then we have all of these other costs over here, don't we? Okay, and what we're going to do with all these other costs over here is we're going to put them into a pool. And we're going to call that an overhead cost pool. Okay, overhead cost pool. We'll put them into an overhead cost pool, and then we will take the total of those costs, say, I don't know, $60, whatever. And we will take that $60 and we will divide it by the number of hours we think we're going to use during the year in making these sandwiches. So let's say we decide that we're going to spend 1,000 hours making sandwiches this year. And this is based on an estimate, 1,000 direct labor hours. So you have 60 divided by 1,000 is how much? Huh? 6 cents? 0.066 cents. So for every sandwich we make, we'll do what? We'll sit here and we'll apply, if we use what? If we use 30 minutes per sandwich, and it's 0.6 per hour for every sandwich we make, we'll do what? Allocate 3 cents. Since it takes us a half hour to make a sandwich, it's 6 cents per hour. Half of that is going to be 3 cents, right? Right? Okay. All right, so we go ahead and we add all that up. This is our overhead. And when we add it all up, the sandwich cost us what, $1.75, $6.75, 678 to make. Did I add that up right? Did I add that up right? Okay, good. So it's 678 is the cost per sandwich, which included what? All of these direct items that we were able to trace directly to the product, plus what? An allocation of those items, or a applying an application of those items that were what? That were in the overhead. Okay? So you take all the cost in the overhead pool, you come up with a cost driver. In this case, it was what? Direct labor hours. We take the what? The total cost in the pool for the year divided by the number of hours we think we're going to spend during the year, and we go ahead and each time we make a sandwich, we apply that to the cost of the sandwich. Okay, we're going to spend a lot more time with this part in chapter 3. Right now, I want you to understand that we have what? We have indirect costs, we have direct costs. Direct costs are easily traced to the product. Indirect costs are going to be applied to the product based on some driver, frequently direct labor hours. Question? Yes, the $60 represents, and we will do this really before the year ever starts, represents our estimate of what we'll think we'll spend for the year on jars of mayonnaise, tomatoes, avocados, lettuce, everything, rent, everything that we think we'll spend for the year. And I just came up with $60 because I don't want to be flipping around big giant numbers up here. Probably be more than $60, but it's what we estimate that we will spend for the entire year on overhead, divided by the number of direct labor hours we think we will incur over the year. And we set that up at the beginning of the year, so then during the year, as we spend time on a product, we can go ahead and apply that overhead to that job using that overhead rate that we set up at the beginning of the year. I circled it. I circled everything and said it went into a pool. This is the pool. The pool cost us $60. This is everything we think we're going to spend on these overhead items for the year. We set that up at the beginning. I mean, we don't have to do it for a year, but commonly in the class we'll set it up for a year. So at the beginning of the year, we're going to think that we're going to spend $2 on tomatoes, $2 on mayonnaise, $2 on lettuce, $2 on onions, $5 on avocados. Do I have to keep going? We'll take all of these numbers, whatever they are, next to each one of these items that we think we're going to spend for the year. We'll add that up. Boom, 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 boom. And in this example, that comes to $60. We take that $60 and we put it in the numerator. And then we sit there and we say, okay, how much labor do we think we're going to have during the year? We'll take all of the amount of labor that we think we're going to spend during the year, direct labor, how many sandwich makers are going to be working per day, per month, totaled up the whole year, and we decide that the sandwich makers are going to spend 1,000 hours making sandwiches. Okay? We take the all the costs in the pool, divide it by the hours, and then each time a sandwich maker clocks some time on making a sandwich, we will apply that predetermined overhead rate that we set up at the beginning of the year, 6 cents per hour. And since this person worked Worked a half hour on this sandwich, we put 3 cents in there. Okay? This was what? This was applied. So maybe I shouldn't have written it over direct, under direct. All of these were direct. This last one was what? Was indirect, wasn't it? And it was applied. Okay? All right. Okay, good. So let's go ahead then and let's go back to the slides here. And the thing that distinguished them from being direct or indirect was the ease or difficulty of tracing it to the product, right? Okay. Okay, good. Now let's just go ahead and let's look at an example again here now with this from the slides with this vehicle. And the cost that we talked about up here, direct labor, direct materials, are obviously both, if you get it right, you're a genius. These are both what type of cost? Direct. Beautiful. Okay. So those are both direct, aren't they? Okay. And then we have the overhead. The overhead is going to be indirect. Okay, good. Now notice this slide is calling out to you what? Something called manufacturing cost. So now we know that our manufacturing costs are made up of what? Indirect materials, indirect labor, and overhead, right? Huh? Oh, sorry. Direct materials, direct labor, and overhead, right? Right? Okay. So we can think of this. We got a name for this. We can call this what? We can call it direct materials. What was the name I came up with it before? Oh, I forget now. I don't know. I forget. I came up with some stupid way to remember it, but now I can't remember my stupid way. Okay. So just remember that you have what? You have direct costs, which are direct labor, are direct materials, and you have what? You have the manufacturing overhead, don't you? Okay. So these are the three stooges. I think that's what it was. Direct labor, direct material, and manufacturing overhead. Those are manufacturing costs. Direct labor and direct materials are what? Direct, because they're easily traceable to the product. Manufacturing overhead is indirect because it is too difficult to trace to the product, right? Okay. Okay, good. So we go over and we talk about an example direct material, and they say the radio that gets installed in the vehicle, right? Each radio has its own cost. Do all cars have the same radios in them? They do not. I don't buy a vehicle unless it's got a good sound system in it, right? You know, I get it. Well, I can't take this. I can't hear Eminem scratching the pen on the paper when he's writing a song in this one, right? Okay, so I can't deal with a lousy radio. Other people, they don't care. As long as the car, goes fast, you could put any radio you want in there, right? Okay, so what happens? Every radio is different. We put the radio in the car, we can easily trace the cost of that particular radio, stereo system, whatever, into that vehicle, right? Okay. The labor, the amount of time that the person spends on the assembly line working on that vehicle is what? Is going to be easily traceable. What's an assembly line? What's an assembly line? The car what? The person stays stationary and the product moves from station to station and they do whatever they do, right? But we know that this guy spends, an hour doing whatever he's doing with the exhaust pipe on this car. I don't know. Okay, but whatever's going on here, we know how much time they spend on that each vehicle as it comes by their spot on the assembly line, right? Okay. Who invented the assembly line? Or who revolutionized it, made it a big deal, huh? Ford, right? Henry Ford. What had to happen before Henry Ford could revolutionize the assembly line? Huh? Don't say he had to be born first. Huh? Huh? We needed interchangeable parts. An assembly line only works if I can do what? Put the same, put the same part on different cars, right? Right? So who invented interchangeable parts? This guy named Eli Whitney. Okay, Eli Whitney came up with the idea, and he was doing it at the time for things like weapons, like guns and stuff. That way you can use the same different barrel with this. I don't know how you put a gun together, but whatever. He could sit there and you could use interchangeable parts. So he came up with the idea of interchangeable parts. You combine that with the idea of the assembly line, you have two huge installments into the Industrial Revolution and all that kind of stuff, right? Trump says he made America great again. Meanwhile, like he's Ford's father or something, okay? So you had to, have a lot of stuff happen first. Okay, so anyway, you go ahead and the time that this person spends on that part of the assembly line is going to be considered direct, right? Okay, now you come over and they talk about what? Manufacturing overhead, which is our third product cost, direct labor, direct materials, manufacturing overhead, and you sit here and we have both indirect labor and indirect materials, don't you? So you have the grease and the oil that you use to grease up each axle on the car or whatever it is they do with the grease. So grease is sort of like mayonnaise, okay? But don't eat grease, eat mayonnaise, okay? Hey, let's try and sell those shirts around campus. Don't eat grease, eat mayonnaise. No? Okay. All right, so what happens? We're sitting here, and we have these indirect materials. We have the indirect, what? Labor, the supervisor who's running from assembly person to assembly person, right? So we got indirect materials. We've got indirect labor, right? Constituting our overhead so far. Is something missing? Is something missing from this slide? We're talking about manufacturing overhead. We got what? We've got indirect labor, indirect material. We know manufacturing overhead is indirect. Is there something missing here? Huh? Somebody said it. Yeah. They left out what? All of these other types of I'm pointing to the supervisor, but these other types, the what? Depreciation, the utilities and stuff, right? So if you really wanted to group your overhead items, your indirect, you could have indirect materials. You could have indirect labor. So this is indirect labor. This is indirect materials, isn't there? But then there's sort of a what? An others category, if you will, that don't fall into those two neat little baskets. And that you have what? You have utilities, you have property tax, you have depreciation, which I'm going to kind of call the others. So when we talk about overhead, those being what? Indirect costs, obviously, don't have to think too hard about that. Indirect labor, indirect material are indirect, right? But then there's these others that are what? Things like the depreciation, utilities, the property taxes, whatever. Okay, so really we have three categories of indirect material, indirect labor, and what? Catch-all others category. Question?
Can you call the others expenses?
No. What does the word expense sound like to you? Does it, huh? There's my account. It's a debit, unless it's a credit, right? Okay. I say that because I teach, I teach introductory. And it's like they have no respect for debits and credits. They keep thinking that somehow God's going to come down and sort it all out for them. And I keep telling them it's not going to happen. I had one student ask me, how do you memorize that? Memorize? When I'm sitting on a park bench, if I live to be 90, if I'm lucky enough to live to be around my dad's age, I'm sitting on a park bench, I'll be sitting there going, your assets increase them, you debit them. You decrease them, you credit them. Everybody will be going, oh, what's your name, sir? I don't know. Assets increase, you debit them. What did you say?
I asked if others.
If they can be called expense, right? No. What does the word expense have in it? expired. The word expense has expired in there, doesn't it? If we treat something like an expense, that means we think there's no more future economic benefit associated with this. It has expired expense, right? What we're doing here is we're gathering costs that are going to go into our inventory account, aren't we? And sit there in our inventory account until we sell the thing, and then it'll become cost of goods sold. Okay, so right now we are not in an expense category. We're gathering costs that we're applying to our product, and they will sit there until somebody buys them. Now, look, guys, I'm using sandwiches probably not as a very good example because, you don't hold sandwiches in inventory for 6 months, I hope, right? And so, but let's say we're just doing this on a daily basis. Maybe for a day it's inventory, right, until we sell it. Okay, then it becomes cost of goods sold. So no. Others simply means that it is not, and guys, this is not a technical term. Don't go into your other classes and say, my teacher says that, others is a category. I'm just saying that we have indirect material, we have indirect labor, and then we have some overhead items that are indirect that I can't put in the category of labor nor material, so I'm put in the category of the others. Did you ever see that movie, The Others? Oh, don't watch it. It's really bad. It's Nicole Kidman, and she thinks she's being haunted, being haunted by these people. And it turns out that these people are actually dead because she's dead too. And they're trying to let her know that she's dead, but she doesn't know she is. And then when she finally finds out she is, you're like, the only thing worse is The Ring, when the girl comes out of the TV, especially if you're watching it on TV. Did she come out? Okay. All right. Okay. So in the olden days, the TVs used to glow after you turned them off. Now you turn off a flat screen, it just goes off. In the old days, the TV continued to glow. So I watched it on an old TV, and when she started coming out of the TV, I turned it off, and then the thing still glowed. So I sat there all night watching it to make sure she didn't come out. Okay. All right. So you come down, okay, and we have a sort of catch-all category that goes beyond just the indirect materials, indirect labor, right? But these are all overhead, aren't they? So we've got what? Direct items, we have indirect items, right? We have our product costs, which consist of our direct items, labor and materials, but what? We also have in our product costs overhead items, which can be indirect labor, indirect materials, and these others like utilities, etc., right? Okay? Okay, good. Now, some costs are considered non-manufacturing. If they are non-manufacturing, then they are not product costs because they are not going into the cost of my product. Therefore, they become period costs. They are non-manufacturing, and these, what's your name? Rhea. These we do expense. We expense them automatically. We don't try to apply them to product or anything like that, put them into overhead. They are automatically considered expenses, and they include selling and administrative expenses. So our period costs are expensed in the period. They are incurred, and they consist of administrative cost and selling costs. Okay, now let's think about selling costs for a second. That's the easier one to understand. Selling costs. What happens? We are going to take these costs that we're holding in inventory, and we're going to take them to cost of goods sold in the period in which we sell it, right? So when we incur a selling cost during that period, you get the proper matching by taking that selling cost in the period in which it's incurred, right? So if I sell an item in 2018, then I'm going to be putting it into cost of goods sold in 2018. And any cost that I incurred, what? Trying to sell it that year, if I'm pointing to selling costs, trying to sell it that year has to go into what? Has to go into the income statement that year. We expense it as a selling cost in the period in which it's incurred. Better matching, right? Okay, now sometimes students will say, well, what about advertising? Advertising is a selling cost, and maybe the people hear our ad on December 31st and come and buy our sandwiches in January. Well, that starts to get into the cost-benefit rule of accounting, the cost of trying to keep track as to how much of the costs are attributed to an advertising campaign at the end of the year versus one that flowed into the next year or whatever are too great. So FASB says, just expense the advertising. Get out of my face, please. Stop asking me that question. That's not me talking. That's FASB talking. Just expense it. Because it's too difficult to try to track the benefit of an advertising campaign. So while we're sitting there and we have this logic as to matching, we have at the same time, remember we're talking about external reporting, we have FASB calling out to us what to do with certain items, right? And I'm telling you that FASB has determined that advertising should be expensed. You don't capitalize advertising. One, you don't know what period it benefits. Two, you don't even know if it benefits. I could sit there all day saying, come to my store. And people go, I hate this guy. And they turn off my commercial before they even hear where it's at, right? So again, if you don't know that you have future economic benefit, you can't capitalize, right? So FASB says you have to expense that. That's the same reason that FASB tells us that we have to do what? Expense research and development. Most research and development crashes, doesn't it? Never works out. So FASB says expense it because we really don't know if you have future economic benefit when you're spending that money on the research. Same thing with advertising. Okay? So we expense that, and it's probably a better matching. Now, how about my administrative cost? Well, I have my CEO up there, my accounting department up there, all day thinking big thoughts, right? My CEO, let's say. What do they do all day anyway? What do CEOs do all day? I don't know, right? They come up there, they come up with all these decisions, and everybody goes, okay, back to work, right? Okay, so we really can't sit there and attribute anything the CEO does to any one particular product. They're over the whole company making big decisions, right? And since their thoughts are so big, we can't really figure out whether they've benefited the products or not. So what do? We expense those kind of costs. So accounting, CEO salary. How about the depreciation on the headquarters building where those people sit? Depreciation on our factory is going to be one of the others. We're going to apply it to our product cost using applying it with our overhead rate, right? For the building where the CEO sits and makes all those big decisions all day, we're going to what? Expense that depreciation or expense that rent. So depreciation rent being treated as a product cost or a period cost is predicated on what's going on in those buildings, in those particular buildings that we're taking the rent and the depreciation for, right? Okay. Okay, now you look at all this and let's see how it relates to the accounting. So our product costs, which include what? Direct costs, our direct materials, our direct labor, our manufacturing overhead. Manufacturing overhead is what? Indirect labor, indirect materials, and the others. Those do what? They get applied to our product, and as we build up our product, whatever it is, it'll go into inventory, and it will sit in inventory until what? Till we sell that item, then we will go ahead and credit the inventory, debit the cost of goods sold, which appears on the income statement, right? Business 20. Remember, guys, if you're having trouble with debits and credits and stuff, there is I don't know if I showed you last time, I think I did, on Canvas, I have a module there. It's called, do I? Did I put that up there for you guys? Hang on a second. I want to see right now. No, I didn't. Okay, I got to do that. I'll put a module up that will have a financial accounting review. I forgot to put that up. Okay, so I'll put a module up that in case you need it, a refresher on debits and credits. I'm hoping you don't. I'm going to be busting out with debits and credits here like no other here in a little while, okay? And so you need to know how to increase an asset, how to decrease it, all that kind of stuff. So I'll put some things up that'll help you review that. But my expectation, guys, is that you got that under your belt, okay? But if you're having some concerns there, please address that this weekend. Okay, but assuming that you're not having any problem with that, let's just take a look. And so we have what? We have our product cost hit the what? Balance sheet in the form of inventory, the 6 whatever it was per sandwich, right? As we produce the sandwich, we put it into inventory. When we sell it, and I guess we'll sell the sandwich for $7, so we make a little profit on that. When we sell it, we'll do what? We'll credit inventory for the $6 and debit what? Cost of goods sold. It hits the income statement, right? Okay. Our what? Our selling and administrative expenses are automatically going to the income statement in the period incurred. Thus, they are called what? Period cost, right? Selling and administrative. Selling, it's easy. Just trying to match it with the sales. Cost of goods sold is the income statement. The selling expense should hit the income statement. Administrative, just it's too much trouble. Just put it in the income statement as it's incurred. Okay? All right, so you look at all this and you got a ton of definitions going on here. You've got what? You've got this idea of direct, indirect. Direct, easily traceable. Indirect, not so easily traceable. We'll have to apply it, right? You've got this idea of product cost. Product cost include what? Include my direct labor, my direct materials, which are obviously direct, and then my what? My manufacturing overhead. Okay, manufacturing overhead is comprised of indirect labor, indirect materials, and the others like utilities, right? And those have to be applied. But all 3 of those are product costs that will hit the balance sheet first, right? Okay, we call those product costs. Then what? Manufacturing costs. You can also call them that. Then you come over and you have what? Period cost, selling and administrative, which are all expensed, right? Yes, they are also called non-manufacturing as well. That's right. Manufacturing, non-manufacturing. So a lot of different ways of kind of saying the same thing, right? Or referring to the same thing. Okay, so it's important that you get those definitions down, okay? So it may not be a bad idea. When you're going home today, you get on the bus or something, right? And somebody sits here and sits next to you, and you say, did you know that direct labor and direct materials and manufacturing overhead are all considered product costs, are all considered manufacturing costs? And did you know that manufacturing overhead can consist of indirect labor, indirect materials, and the others? And did you know that selling and administrative expenses are expensed? They're also considered period costs, and you expense them in the period they're incurred. Did you know that? I promise you that person will move. You'll have the whole bus to yourself eventually. Okay? All right. Okay. All right, so practice with that. Make sure you're comfortable with that, because after a while, you know, it gets a little tough to answer questions if you don't know those definitions, right? Okay? Okay, good. So let's go ahead and let's see if we can work this one through. Okay, this is an example of something that you'll definitely see a problem like this on your midterm, I promise you. Now I have to warn you a little bit, because sometimes I think students say, why is he doing this, telling us how to answer all the questions going to be on the midterm? I've been teaching CPA review for 20-something years, and I can't get out of my DNA trying to tell you how to answer questions that you'll be getting on an exam. So, sorry, I can't stop, okay? You don't mind, though, do you? Okay, okay, good. So, using the above information here, total factory overhead. So, if we're looking for overhead, we're looking for indirect material, indirect labor, and the others, aren't we? Okay, so let's go ahead and let's take a look. Is raw material an overhead item? No, it's material, right? Okay, how about indirect materials? Yep, got to pick that up, 2,000. Okay, how about indirect labor? Got to pick that up. This is too easy for you guys. I can't put this on the test. The finance and accounting department will come to me and say, what are you doing? Why is everybody getting an A? I can't have that, can I? How about maintenance of factory equipment? Yeah, maintenance of the factory equipment. Look, we're not going to tell the guy, hey, Joe, machine number 11 is down. Get over there. Hey, Joe, when you're done with machine number 11, run over across the factory and go to machine number 12. See what's wrong with it. Joe says, well, why is a 12 so far from 11? No. But what happens is you sit there and you do all this. She's running all over the place. We can't sit there and keep track of all that, right? Okay, so that would be what? That would be considered indirect, 2,800. How about direct labor? Nope, it's direct. So I could have just pointed down here, I guess. The answer is A. This is the quiz, by the way. No, it's not. We'll have more in the quiz. These are some. I'm glad I said that. You know how you have the quiz document as well, and we'll go through that probably next time. On Monday, we'll go through the quiz for this chapter too. But sometimes you'll say, hey, I'm having deja vu because I've seen this question before. It's because I've embedded some of the quiz questions into the slides. I do that for the first few chapters, guys. Don't expect that to continue on because at some point I got tired and stopped doing that. Okay, but towards the beginning I had good intentions. So for about 5 chapters it's that way and then it stops. Okay, but for a while we'll have that. Okay, all right, good. Let's take a look at this one. Which of the following would most likely be included as part of manufacturing overhead in the production of a wooden table? Okay, so how about the amount paid to the individual who stains the table? Direct labor. Hey, you spent 45 minutes staining that table. We can track that easily, right? How about the commission paid to the salesperson who sold the table? Well, first of all, we could probably easily trace it, number one. Number two, it is not a manufacturing cost. It is a selling cost, a period cost that's going to be expensed, right? Okay, good. How about C, the cost of glue used in the table? Well, I think so. I mean, we're not going to sit there and say, hey, buddy, how many brush strokes of the glue? Well, I don't know. One time I dipped twice. One time I dipped 3 times. Is this a problem? Okay. Now, glue is like mayonnaise, isn't it? Don't eat it. You can put that on the shirt. Okay. All right. Then what? Cost of the wood used. Yeah. Okay. Like 3 2x4s and 5 6x6s and a piece of plywood. Yeah. We can pretty much track that, can't we? Okay. So the answer here is C. Okay. Good. Ooh, numbers. The total for the period costs. So now we have to sit here and pick out the list of period costs and add them up. Can we do that? Okay, how about factory supplies? A period cost? Factory supplies are manufacturing overhead, aren't they? They're part of my overhead. Supplies are usually small items, so we don't treat them as direct materials. So it's the supplies like the grease that were used, the glue is a broad term for supplies. Okay, so no, that's a product cost though, right? How about administrative wages and salaries? Yes. Administrative, so we got to pick up that 92,000. Good. How about direct materials? No. Sales staff salaries? That's a selling expense. So what's that, 32,000? Okay, good. How about factory depreciation? Factory depreciation is one of the others for our overhead, isn't it? Okay. Right? Okay. Right? Okay. All right, good. How about corporate headquarters building rent? Yeah, we're going to pick that up. That's those corporate headquarters people. Who knows what they're doing in there all day, but we're going to expense everything they do, right? Because it's probably not helping us. Okay, how about indirect? Now, I say that. Accounting is an administrative cost, though, right? So the only people who know what they're doing in the administrative building are the accountants. Okay. All right, how about indirect labor? No. How about marketing? Yes, that's a selling issue, isn't it? Good. How about direct labor? No. Okay, so I'm thinking if you add all that up, I hope it adds up to 340,000, something like that. I mean, 647, what? 82,000? So why am I saying B is the answer here? I'm looking at the answer. It says B. Huh? Oh, thank you. Okay. I was going to start to get nervous here. You say it adds up to 307,000?
Yes.
Okay. Okay, sorry guys. I was looking down here. I'm like, what on earth is going on here? Right? Right here's the answer for these. That adds up to 307,000. Okay. Now, if we're down here in 19, it's asking us the manufacturing overhead costs, right? So we go back through the list. Is factory supplies overhead? Right? Is administrative? No, we already know that's a period cost. Okay, administrative cost is going to be expense. How about direct materials? No, direct materials are what? Are direct. They are not manufacturing overhead. Manufacturing overhead is indirect, right? Okay. All right, good. How about sales staff? No, that's a um, period cost. How about factory depreciation? Factory depreciation we do pick up. That's 52,000. Okay, good. Corporate headquarters, no, period. Indirect labor? Indirect labor is a manufacturing cost, 23,000. And marketing, we've already determined is administrative, selling, I should say, it's going to be expense. And how about direct labor? Direct labor is direct. And so when you total these up, there's my, what, 82,000? Okay? Okay, good. Have you ever heard of the Who Cares channel? On Sirius Radio, they have this channel. It's channel 179. It's called Who Cares? No, I'm just kidding. There's no such channel, okay? But if there was, this is the kind of stuff they'd play on it all day. This would get played once an hour at the top of the hour on the Who Cares channel. And now for news from the Who Cares channel, okay? Direct materials and direct labor are called prime cost. We take our direct labor, combine it with our manufacturing overhead, and we call that conversion costs. Now, I kind of get the term conversion cost because what? We have a bunch of raw materials sitting on a table, and no matter how much we wait for them to turn themselves into something, they won't. We need what? We need labor, and we need a little electricity, little labor. Maybe we electrocute the person who's working on it so they'll work faster. And what happens? Boom! We end up with a product. We converted raw materials into product, didn't we? Okay. Now, I guess they're calling direct labor a prime cost and direct materials a prime cost. I can't explain to you why those are both prime costs. I don't know. I didn't invent this. Okay, this was already around when I was around, and I always looked at it and go, okay, I don't really feel it here. I'm not feeling the meaning, and I still don't. Thus, this should be played all day on the Who Cares channel. I don't care that they call these prime costs when you take the materials and the labor together, and when you take the labor and combine with the overhead, now it becomes part of conversion. Because the labor is what? Depending on what way you look at it, it's either a prime cost or a conversion cost. Okay, that's it. Who cares? But I can't have you walk out of a managerial accounting class not knowing the terms that for all I know, an alcoholic thought of this one day when he was like sitting there going, these are prime cost and these are conversion cost. Give me another drink. I don't know. But I can't have you walk out of here not knowing that. Any theories? Anything you can give me to bull my other classes into thinking that it means something? I get that materials is prime. I get that. I can feel that. And I can feel that labor. I don't know. Why is labor prime? I think labor should see its union Okay, and say that it wants to be categorized as one or the other, that it's tired of trying to be in both categories. Okay? Okay, that's it. That's all I got to say about that, guys. I can't explain it much more. Hang on, a couple more questions, and we'll go. Property taxes on a manufacturing facility are classified as now. Property taxes we know are part of our others for our overhead, our indirect costs, right? Right? So it's not a what? It's not a period cost. It is a conversion cost, right? Okay. Okay, good. The property taxes on a factory building would be an example of it is not a prime cost because it is part of my manufacturing overhead. It is a what? Conversion cost. Isn't that annoying? Who cares? I don't care. Okay. All right, now what we're going to do when we reconvene next time is we're now going to start to take these costs that we've talked about, our manufacturing costs, our indirect material, our indirect labor, our manufacturing overhead, and we're going to start to partition them into being either a variable cost, a fixed cost, or a mixed, which means it has variable and fixed components to it. Okay? All right, guys, I will see you. I don't get to see you till Monday? Aw. Okay, so take a look at your debits and credits, your financial accounting. If you think you're having trouble with that, you need to get on that. Enjoy the Super Bowl, and I'll see you on Monday. Hi.
Looking for the ad code.
You want an ad code? Um, okay, I'm going to have to look at a couple things, okay? Because I can't add more than if the total in the class exceeds 60, I'm going to have a problem, okay? But hang on.